Hey everybody, Preston Bryn here with Trader User Group's weekly financial roundup for a holiday shortened week ending April 17th, 2014. What I've got on the screen here are the E-mini S&P 500 futures. You can see we're still fairly consistent in holding this channel that really initiated in the fourth quarter of 2012 all the way through 2013 as we're now coming into 2014. Now 2014, it's a lot rougher than we had experienced all of last year. But as I look at this, there are a couple of things that we really need to watch out for in this first full week of trading from the holiday week this past week. Speaking of holidays, I hope all of you are having a really good Easter weekend. So now if we look at the chart here, you can see that we had a little bit of a pullback here like that. But again, this pullback here was a little bit more significant. We did venture outside the border of the channel, but we hit a couple of key support points, and we've held ourselves fairly well. And now we're starting to move back up. In fact, on the daily chart here, based on the way we get our buy and sell triggers, we are now in a market here that could trigger to the upside on the S&P 500 E-mini futures here, as you can see. So now there are a couple of key things that I really want to watch for that are going to be important for me, and it really doesn't reside in the S&P 500. But you can see here in the S&P 500, I'll blow it up for you, and you can see a couple of things that happened this prior week. You can see that once we hit the downside on the 14th, we've moved up fairly strongly on the futures, and we overtook our 50 EMA very nicely. And you can see here with the 50 EMA, we're sitting just slightly above it right now. There's the 50 EMA sitting right there. We're slightly above it, and we've crossed back above that key resistance point, 1846.50. Now, the key thing that I want to watch for this week, as we start the week off, I want to see that this level here holds. We haven't taken out a little prior pivot high here, so I want to see that we take that level out, and I want to see that not only do we take that level out, but we hold it, and that level is 1867.50. So if I was looking at this from a very near-term perspective, you can see right here at this level, I want to see us take that out and hold it going into Monday, Tuesday, and Wednesday of next week. If we do not take that out, I suspect we're going to probably come back and test this 1846.50 because for some reason the markets like that area. We seem to have an equal balance in buyers and sellers, and it's just there's really been no winner. And yeah, granted, we do go below it, but then sellers give up. They don't have the strength. Buyers jump back in, and we do go above it as well, but then buyers run out of strength and sellers take over. So we're almost an equidistant battle going on right now between that level right there and then this level right here. So or back down to this area here. So I want to just see who is going to finally win this and break this conundrum. And we take it out and we move up, or we take this out and we move down. Now, only time is going to tell. And price action, of course. Time and price is going to really tell us what we need to know. But right now, we're kind of sandwiched between these two. And in many respects, this also shows up in the bond futures chart, which I'll show you in a minute. Now, what's going to be the impetus to move this up and take out these highs, or move down and take out these lows? Well, I had mentioned earlier, I want to look at the NASDAQ, and I want to look at the Russell futures, which is really composed of small cap, higher beta, or some instances mid cap stocks. And I want to see that this downward draft that they've experienced is coming to an end and the markets move higher. So as you can see on the E-mini S&P 500 futures, we've overtaken the 50 EMA. If we look at the Dow futures, you're going to see here with the Dow, we've overtaken the 50 EMA. That's this red line right here, and we're moving back up. So both of them, we've overtaken the 50 EMA. However, if we look at the Russell, I put a regression channel on here. We're nowhere near the 50 EMA. We've sold off. There's the 50 EMA right there. We're way down here. In fact, this regression channel, it has formed basically a trend here that is saying the trend is down. And what's the definition of a trend? Lower highs, lower lows. Well, there you got the lower highs, right? There you've got the lower lows as we've kind of scaled down this regression channel. So I want to see us break out of that. The 50 EMA has got a downward vector. The 200 EMA is now almost flat. So I want to see all of this resolved. We've got a solid support area here that's kind of defined with that key pivot here. This is on the Russell 2000 futures. I want to see that the E-mini Russell 2000 futures, I want to see that we break out of this channel, and in order to do that, we've got to take out the 50 EMA and then this downsloping channel, the upper line of this regression channel here. Now, I want to see us do that. If we do that, that'll bode well for the Dow and for the S&P 500 futures. If this breaks down, and we come back down and retest this area here, then that is not good at all. And that will not be good, and it will translate into probably further downward action in the S&P 500 and the Dow. So this is going to be one of the areas that I'm going to be watching very closely. Now on the Russell, you can see that we held up fairly nicely on the 200 EMA. I mean, it really provided solid support, which is just slightly north of that key pivot point right there. But again, until we clear these hurdles here, we're still down on the Russell 2000. And if we look at NASDAQ is in the same conundrum. NASDAQ, I've also drawn a regression channel going down. And again, just like the Russell, we've had, lower lows as we go all the way down the bottom of that channel, lower highs as we continue to make our way down, right? So I want to see that this conundrum gets resolved. Again, there's the 50 EMA right there, which is sitting on the upper boundary of this regression line. I want to see us take that out. Now you can see we came down and tested a key level right there, which is, in many respects, the NASDAQ got hurt more than the Russell. The Russell, if you recall, didn't come down and catch its key pivot that was made in February. The Russell was just north of that, but NASDAQ did. And now what we do not know is this a little bit of a bounce, much like we had there, much like we had there, much like we had there, and then a rollover, and then a rollover, and then a rollover. So is this bounce going to come up and give us a rollover, and we're going to test right there? I do not know. No one knows, but we've got to watch the price action. We've got the 50 EMA that's got a slightly downward vector on it. The 200 EMA is just giving us this flat vector right now. So we've got a number of issues that we've got to resolve in NASDAQ and in the Russell. Remember, the NASDAQ and the Russell are composed of higher beta stocks that have a much larger PE ratio. So I'm going to watch these very closely to see, and typically these indexes, the NASDAQ and the Russell, lead the markets up, and they lead the markets down. And they've been leading the markets down, and they're putting downward pressure on the overall S&P 500 and the Dow. Typically, you'll have NASDAQ and the Russell lead the way down, followed closely by S&P 500, and then followed by the Dow. The Dow is usually kind of the last. So generally, in a strong down move, NASDAQ and Russell get hit the hardest, then the S&P, and then the Dow, just because of the market cap of the various stocks that compose that particular index. So again, I want every one of you to pay attention to the NASDAQ and the RUT. To see where this thing goes. Now, I mentioned the Treasuries. If we take a look at the Treasuries, we're also sandwiched. Let's just scale this out. This is the 30-year bonds, okay? You can see right in this area here, every time we've come up towards this upper boundary, right, we've been met by a downturn. It gets pushed back, and that's where we are again right here. Now, I've been a longer term bear in bonds, but I do trade the upside. Um, but we're now sitting just below a key pivot right there, an interim key pivot. We're sitting right at that level right there right now, just slightly above the 50 EMA. We are still up on the daily charts. However, we're at this boundary here where sellers have traditionally come in and pushed it back down. But there do not seem to be a preponderance of sellers because buyers are always willing, once we get somewhere in the center of this area, to pick it back up. And we've been in this area going all the way back to almost the beginning of January. January 22nd, 23rd was when the markets really started to crater in 2014. So this is kind of where we're sitting now. So I would not be surprised to see us come back into this area until the differences with NASDAQ and the Russell are resolved. If they continue to fall, you're going to see the bonds come back up and challenge this area again. And if it gets back up into this area, I'm going to be looking at picking up more shorts in the bond market or playing TLT to the downside. If it gets down here, we're probably just going to be in some kind of mode like this where it's a little bit of chop, where you'll see buyers and sellers duking it out. I think we're going to say, just like the S&P 500, we're kind of sandwiched between these two key areas right there, and it's a fairly wide range, from around 128 to about 130, 135, 136 in the bond market. So it's about a $7,000 per contract range in the bonds, and every time we get up in this upper area, then sellers take over. When we get down to this area, buyers take over. This will be resolved. I suspect it's going to be resolved to the downside, but it may take 2014 going into 2015 for this to be finally resolved. A lot of the air has already come out of the sales with bonds. As you can see right here, once we got up to this peak here, we've been sellers of bonds. Back up in these peaks up here, we've been sellers. And we've ridden this all the way down, and now we're just in this really choppy area here. So as we consolidate into this area, I think the next big move in bonds is not going to be that way. It's going to be this way. But again, if you're holding short bonds, it can be pretty rough in here because we're just bouncing around, which is what we're going to do, for I think, until the Fed's direction gets a little bit more clear. And the monetary situation gets a little bit more clear. That's what I kind of believe is going to happen. Now, if we look at the interest rate futures, the interest rates. Here is the 10-year or the 30-year rates. You can see here where we're sitting on a key level. This shows you the interest rates of the 30-year bonds. You can see we're sitting on a key level right now. I mean, it's just a key, huge support level. It's a key pivot right in that area there, a very strong pivot. This is where we're sitting right now. Should this break, and should it break to the downside, that's going to be very ugly because we got a nice run down to this level right down here, which again is another key level that you can see. The markets have kind of paused. If we run down to this area here, that would give us our probably 7 to 12% pullback in the stock market, the equity market. But if we do get down there, that will give us the pullback. But interest rates, if we get down in this area here, I'm going to be a big buyer of TBT or a big seller of TLT because we're going to have that bounce. So this is what we're watching very closely. So we're on the boundary levels, if you will, of the bond market. So I'm going to be watching this very closely. Now, a couple of other key things that I was pointing out to our members. And remember, for our members in the second or third week of January, I was pointing out already that 2014 is going to roll different than 2013 did. And we started getting early warning signals in the second and third week of January. I mean, we just started to get them very nicely. One thing that we looked at was a ratio chart. I went over it in this weekend seminar with local members here in the state of Connecticut. And you can see this is a ratio chart here of consumer cyclicals over staples. So you can see this big, huge down move here, and when this moves down like this, in that fashion, which was pretty much the entire month of March, okay, we started the first move here in January, and we had a little bit of a reflex bounce as we moved back up like that. But we just rolled right back over again, and we've been hard down, and we hit a key support point right here. That means risk is coming out of the market. People do not want to take risk. Now we're getting a little bit of a bounce here. So I wouldn't be surprised to see a little bit of a reflex bounce in equities like we got in NASDAQ and the Russell this past week. Remember, the best performers this past week was the NASDAQ and Russell because we just had such a large sell-off. But this ratio chart is saying that risk has come back out of the market. And another way to look at risk would probably be to say, let's take a look at the value stocks versus the growth stocks. And again, this is another one that I like to use, which is IVW and IVE, with IVW being the growth stocks and IVE being the value stocks. Again, just like cyclicals and staples, when this rolls like this, this indicates that risk has just been sucked out of the market and people are seeking safety. So we've seen it in the bond market with interest rates. We've seen it in cyclicals. We've seen it in staples. We've seen it in the growth versus value. And then the other one that I want to show you here, which is just really indicative of just how much risk has come out of the market. Look at the utility sector here. Now, this utility sector, when I pretty much highlight the entire year of 2014, we entered 2014 right there, and this is where we are right now. I mean, folks, a 3-year-old can tell you that direction is in that way. The utility sector is leading the markets in 2014, and when we're at near or all-time highs and the utility sector is leading the way, well, utilities, as you guys know, kind of runs the direction of bonds. It's like trading that because it's such a capital-intensive industry. When interest rates go up, utilities goes down. When interest rates go down, utilities go up. Generally, when you're reaching all-time highs for continued movement up higher in the equity markets, we want to see cyclicals, or discretionary leading the way. We want to see technology leading the way. We want to see financials leading the way. We're not seeing that. We're seeing utilities. So that means that the markets are in this transition moment. I want to see how this works. Now, if we step out and look at utilities, let's look at and again, this is a daily chart, but let's just come way out here. Look at this. We are near all-time highs with utilities. Utilities hit all-time highs in December of 2007. This was right before the major crash that we had because money was seeking safety. That's where we went. That's why utilities hit all-time highs. We're darn near close to that right now up in this area here. If the markets do catch wind, equity markets start to move higher, well, then a nice trade here would be shorting the utility sector. But right now, there's strength in the sector. You can see here, again, this is this area right here is 2014. You can see what we've done in 2014. Again, a 3-year-old can see that. I mean, it's just rocket ship up, just like that. So we need to really look at what's going on there. Now, this is this does not mean that the market's going to have a really bad year in 2014, because if I show you the beginning of 2013, right? Here's the beginning of 2013 right there, right? Right there like that. So you can see the beginning of 2013, the utilities also had a strong move up, just like that. This was Q1 of 2013. Here's Q1 of 2014, all right? And then look at what happened the rest of 2013. Utilities worked their way all the way down. And you can see the trend line. It was down, up, and then, we kind of just rerode that trend line down. So what's going to happen in 2014? Well, that's not to say that the same pattern is going to exist like that and we come all the way back down here again. But it could. I wanted to point out that the years are starting, the 2013 starting off just like 2014, and look at how 2013 ended up. Okay. So, but I do wanted to point these two things out for you. So again, I'll net this out. I want you guys to watch the NASDAQ. I want you to watch the Russell. We need to recapture the 50 EMAs. That's very important as we come into a full trading week this coming up. Now remember, there's an old adage, sell in May and go away. So we could have, and volume traditionally falls off in the summer months and then picks back up into the fall time. So, and we've got elections here in the United States, and typically in midterm elections, markets get weak going into these elections. And then they strengthen up in the fall time. So things are set up here. Just based on history for the markets to pull back in the summer and then finish strong in Q3 or in Q3 going into Q4 into the end of the year of this year. But that's not to say it's going to happen here. But I do want you to pay attention to those key markets. NASDAQ and Russell, if we see follow through and strength into this next week and going into May, I'll feel a little bit better about the markets. Right now, we're still in this correction mode. And let's just see how this all plays out. Okay, everybody, for those of you that are not members, I'd like to invite you in and check out our membership. I think you'll really enjoy it. Check out our special offers. We got a number of special offers that are very popular right now. We're getting a lot of interest in them. If you're a member, then we've got a session tonight on the markets coming out for the next week. Otherwise, have a really great Easter Sunday for all of you members around the world, and I will be in touch tonight for our upcoming preview for this week coming up. All right, everybody, have a really good one. Bye now.